All right, let's think about your finances for a second. Imagine they're like a high-performance car. You've got to have a good suspension system, right, to handle all the bumps in the road. Well, today, we're talking about the financial version of that system, supplemental insurance. If you've ever found yourself wondering what these plans are all about, or if you even need one, you are in the right place. We are about to cut right through all the jargon and make it make sense. We're going to start by uncovering that sneaky gap in your regular health coverage. Then we'll talk about the safety net designed to fill it. If a totally unexpected medical bill, say for $5, maybe even $10,000, showed up in your mailbox tomorrow, what would you do? Could you actually pay it without, draining your savings or having to go into debt? It's a really tough question, I know, but it's a super important one. For most of us, that's not just some small inconvenience, it's a potential nightmare. A single bill can kick off a major financial crisis, creating stress that just seeps into every part of your life and threatening the very savings you've worked so incredibly hard to build up. So that right there, that huge, unexpected bill, that is the exact gap we're talking about. We're going to look at the tool that's specifically designed to plug this kind of financial hole. So what on earth is supplemental insurance? Well, think of it this way. It's a plan that pays cash directly to you when you have a covered accident or get sick. It's not here to replace your main health plan. No. It's designed to work with it, giving you that cash you need. And how it works, it's honestly as easy as 1, 2, 3. First, something happens. You have a covered accident or illness. Second, and this is the most important part, the plan pays cash directly to you. Not the hospital, not the doctor, you. And third, you get to decide how to use that money. Pay a medical bill, cover rent while you're out of work, heck, buy groceries. Now you might be thinking, hey, wait a minute, I've got health insurance for this exact reason. And you're not wrong, but what surprises a lot of people is that their main health plan isn't some kind of magic shield. The gap in your coverage. Let's kick things off with a big question. Why isn't your main health plan always enough to really protect your bank account? We all pay those monthly health insurance premiums, right? And we kind of assume we're all set. But here's the thing you have to ask yourself. What really happens before your insurance actually starts paying the big bucks? I'm talking about your deductible. There's almost always what we call a coverage gap, and that gap is exactly where the financial risk is hiding. Okay, so what is this gap? Well, it really boils down to two key numbers in your insurance policy. Your deductible and your out-of-pocket maximum. Put simply, it's the amount of money you have to pay for your own care before your main insurance plan finally kicks in and starts covering the big stuff. And this gap, it leaves your entire financial plan totally exposed. Your savings, all that hard work, it becomes this fragile bubble, and a single unexpected illness or an accident is like a pin just waiting to pop it, undoing years of progress in a single moment. So the big question is, how do you protect that bubble? Well, you build a system designed specifically to absorb that impact. And this is where we introduce the whole concept of a financial shock absorber, a tool that is engineered precisely to fill that dangerous coverage gap. This is it. This is that shock absorber. Supplemental insurance is built for one main job: to take the financial hit from that deductible and out-of-pocket gap so your savings account doesn't have to. But honestly, the way it works is what makes it such an incredibly powerful tool. And this right here, this is probably the single most important difference you need to get. Your regular health insurance, it pays the doctors, it pays the hospitals. But supplemental insurance, it pays you. The benefit is paid in cash directly into your bank account. Let's just make this crystal clear. Primary health insurance, the money goes to the medical providers. Supplemental insurance, the money goes directly into your pocket. That gives you total control to use it for whatever you need. So what is this safety net really made of? Well, it's a system, and it's built on 3 protective pillars. Each one is designed to handle a different kind of risk, and when they work together, they form this comprehensive shield all around your finances. These are the 3 core components of the system. First, you've got accident insurance for when those little mishaps in life end up with some pretty big bills. Then there's critical illness insurance for a really serious life-altering diagnosis. And finally, hospital indemnity insurance for those times you actually need to be admitted for care. Let's break down the job of each pillar. Accident plans, they pay cash for specific things related to an injury. Everything from the ambulance ride to physical therapy. Critical illness plans, they give you a large lump sum cash payment if you're diagnosed with a major condition, which gives you money and flexibility when you need it most. And finally, hospital plans pay you a set cash amount for each day you're in the hospital, which really helps cover costs while you can't work. Okay, so the theory is great and all, but let's see how this system actually works in the real world. We're going to run through a quick case study to see the tangible, dollar for dollar impact of having this safety net in place. So, meet Martin. He's just out for a weekend bike ride. He hits a nasty pothole, and boom, ends up with a broken arm. So, between the ER visit, the x rays, the follow up physical therapy, yeah, the bills start rolling in. The final bill adds up to $4,100. Now, look, it's not that $10,000 nightmare scenario we talked about earlier, but it's still a pretty big, unexpected expense that would be a major hit to most family budgets. Now, Martin's primary health insurance is actually pretty good, but it has a $3,500 deductible. That's the gap we've been talking about. So before his main insurance pays even one penny, Martin is looking at a bill he has to pay right now. But Martin had an accident plan in place. Because of his specific injury, his supplemental plan paid out the full $4,100. And remember where that cash went, right? It went directly to him, not the hospital, him. And here's the best part, the final result. Martin takes that cash, pays off his entire $3,500 deductible. The medical bill, totally gone. And he's still left with $600 extra right in his pocket. We're going to pull all of this together into a super simple framework to help you find that perfect match. Think of this right here as your quick and dirty guide. An accident plan? It gets triggered by an injury, and it's your best friend for covering that deductible. A critical illness plan is triggered by a major diagnosis, and it's all about protecting you from those truly catastrophic costs. And a hospital indemnity plan? That's triggered by a hospital stay and is perfect for covering those day-to-day costs, like lost wages when you're laid up. All right, now let's get personal. Let's figure out where you fit in all this. If you're healthy, active, but your budget's a little tight, an accident plan is a fantastic fit. It covers your biggest risk. If you're healthy and budget isn't a huge issue, you could layer an accident and a critical illness plan for some serious peace of mind. Now, if you've got some ongoing health concerns and you're watching your wallet, a hospital indemnity plan is probably your best bet. It's a safety net for any kind of hospital stay. And if you have those health concerns and a flexible budget, combining hospital indemnity and critical illness creates the strongest, most comprehensive safety net you can get. That is the power of having a system like this. And this all brings us to the bigger picture. A system like this isn't just about paying one bill. It's about protecting your single most valuable asset, your ability to earn an income. When a medical issue pops up, the cash from a supplemental plan can replace lost wages or cover daily expenses, making sure your financial life doesn't just grind to a halt while you're trying to recover. So, how do you actually build this system for yourself? Well, choosing your safety net isn't about guesswork. It's about taking a really clear look at your health, your budget, and your personal risks to build a plan that delivers one thing above all else. So, if you remember nothing else from this, remember things. 1. Your health insurance is not a magic shield. That deductible is a real financial risk. 2. Supplemental plans are the answer, paying cash straight into your pocket. 3. When it comes to accident plans, you have the pure simplicity of no deductibles or the support for managing costs. And 4. Hospital indemnity is for broad, everyday protection, and critical illness is for those massive, targeted events. And I want to leave you with a question to chew on. Take a real look at your own health plan, your budget, and your life. Which one of those gaps are you most concerned about? When you boil it all down, it's simple, peace of mind. It's the confidence that comes from knowing you have a financial fortress built, which allows you to focus on what really matters instead of stressing out about how you're going to pay the bills. So I'll just leave you with this final thought. A health emergency is bad enough on its own. It should never, ever be allowed to trigger a financial disaster. So take a hard look at your own plan. How well protected are you, really?